pairing.
Greetings, traders. It is I, Abdul Shabazz. This is some real change stock options trading journey. And today, this fabulous Friday that is upon us, looking to see what opportunities this market will yield, if any. Very nice yield yesterday from the 677 all the way up to the 680.3 that I called out. $680.5. And that is also the profit target of that weekly call that we called out at the 661 strike, 662.5 entry, 666 add, 672.4 first profit target, 680.5 second profit target for that weekly call. Coming into today, if we get under that 677.5 area, I'll be looking for a put. So that'll be a put at that 677.1 area off of a 679 strike, 674 first profit target, 672, five second profit target, and for a call today. $677 to the 674, down to the 672.5. That's what I want to see for a put for a call. Yesterday's profit target was hit. First profit target and the weekly profit target was hit as well. Amazing. It's a wedge. I don't know. I don't like any call in this area today because of this wedge. I don't like any area. You get above the 682. You got resistance immediately at the 683. She's wedging. I don't like it. I don't like any calls today. I don't like any calls. $685, 6. Will definitely be the tested area. $683, 4. Be the first profit target. 685, 6 maximum profit target. 683, 4 first profit target. Off of 682 entry. 680 strike. What that will look like is this right here. That's exactly what that will look like. If that should take place. That's what I'm rocking with. 682 call. Break and retest. 683 first profit target. 683 4. Second profit target 685 6. Market decides to come down and break this wedge, break this control buying algo. Look to get in it at a 679 strike, 677 1 entry. And take that down to 674. And then possibly 672 5. Let's go ahead and move that over to the larger charts. Think of swim charts, see what it looks like there. Thank you all for tuning in. Thank you for hitting the like button. I do appreciate you. That's how I'll be rocking there. Okay. Start our top-down analysis. And this is a very strong weekly candle breaking out of this control selling algo, which is what allowed me to see that possibility down at the 661 area, calling a 661 strike, getting in at 662.5, adding at 666.2. First profit target 672.4. Second profit target 680.5, which was hit yesterday. Didn't call out anything for the weekly for put. And that was simply based upon what the market was showing us. And that's the weekly version. Simply marvelous. Simply marvelous. Doing a little bit of maintenance while I'm here. Doing a little bit of maintenance while I'm here. Hit that sweep area and took off. Saw it. A little bit of maintenance. Okay. Monthly overhead resistance. And why is this white right here? It's that weekly chart. Analyzing my weekly chart. Daily chart. Bottom middle is a 30-minute chart. Okay, so those are my alarms and profit target. Looking for a 680 strike, 682 entry. Off that 682 entry, looking for a profit target of 683.4, and then possibly 685.6. That'll be dynamic if that does happen, because then we'll be knocking on the door of going green for the year. 685.6 is where we go green for the year. So let's keep that in mind. We got an alert for entry level, first profit target alert, second profit target alert. Also, we have an alert for a put. I want to get in at the 677. Okay, we got an alert at the 678.5. Looking to get in a little bit below that towards the 677 off of a 679 strike. Want to take first profit target at 674. Second profit target, if there will be one, will be looking more towards a 672.5. Those are my plans. How they look on the chart. This is how the arrows line up on the trading view chart. 10 minutes until we get started. Big shout out to the team. If anybody has anything they want to put in the chat, if anybody has any trading plans that they would like to share, or anything beneficial that they want to bring out or point out to the team, feel free to do so. Todd Macon, Jesse Swanson, Quiet Soul in the building. Shout out to your team. Big shout out to those of you who are kicking it with us on Kick. Appreciate you as well. And big shout out to those of you who are watching the replay. We actually have more people watch the replay than actually attend the live. But we do appreciate you and look forward to one day you potentially trading with us together on live. The entire market is green this morning. The entire market is green. I just love, team, how it comes out the gate, comes right up to my line, and it stops. You talk about getting somebody worked up. It comes right to my line, and then stops. It's important to have these lines on your chart, guys. Every line on this chart means something. And they don't give these lines to us. We have to work very hard to get them. Do not take them for granted when I give them out. Do not take them for granted when I call them out. Verily, you see, they are respected. As I told you all, I don't really like a call because of the wedge area that the market is in. But in order to take a put, I do need to see us come down and get underneath the 77.7, 677. However, we do have a plan for both. Again, that's why we called out the 682 for our entry, because we knew there was a monthly area of resistance. Wanted to see us get over that, breaking resistance, and grab that 682, take it to the 683, and then the 685. That still very well may happen. This could just be a liquidity trap set up by the bulls to get some eager bears to go ahead and jump the gun, get out of their position, out of their weekly position, as in order to, benefit, you have to close that position. And options do expire today on Friday. So, might be a later rally move. But if we do continue to go below the 678.5, I have an alarm set there. Beautiful rejection right out of the gate. Serious rejection right out the gate at 681. The entire market is green, however. See that Meta's green, Nvidia's green, Netflix is green, Tesla is green, and even Apple is only 4 cents off. Jesse said he's feeling ambitious. I'm feeling cautious. See what the big wig's talking about. And if we eliminate pre-market, this is what we're looking at. So we get a much, much better perspective of how retail participated in yesterday's action and the type of volume that they came with as well. So I took pre-market out of the game so we could look at retail. You can also see clearly why I'm interested in a put underneath that 678.5 area, and why I'm interested in a call for a very decisive, strong continuation. Anything other than that, chop.
I think that when you hire hundreds of thousands of people to be sure that your package comes the next day, and then you try to figure out, like a Django, which ones can you fire, you have a little bit, you have a cost issue.
Do you ever, I mean, I don't think this pressure will ever be brought to bear, but it is a conglomerate. It is the modern day conglomerate.
Right. In an era where we kind of removed the conglomerate premium, right?
Yes.
Right,
and,
where we say, oh, there aren't any, except maybe Berkshire. But really, Amazon is. It's got this enormous retail business. It's got this enormous AWS. It's got a media business.
The satellite business.
Thank you.
Leo. No.
Does it get a premium because of that?
It's like, and then you break it up. So even standing alone, the semiconductor business would be more than $50 billion. And then you've got, you've got these things like he's talking about rural. Like after the satellites, you're going to be able to do 1 billion more packages. And I'm saying, why, 1 billion, this, that. It is a juggernaut, but it was a juggernaut that people felt was spending too much and had no clear line of sight. And there's line of sight now for everything, Carl. Yeah. And that's what made me so excited about the stock.
I want to get you on sort of related transports. Jim, the transports are up 4 weeks in a row, all-time high yesterday. They're up 4% since the war began.
This is incredible, but there had been a 3-year downturn. We're speaking to the person who runs FedEx Freight, because that's going to come public soon. And you had business just flat to down for 3 years, and finally it's picking up, which is rather amazing because you would think, well, why now? Some of it is medical, and the other big data center. You need to bring all these things to the data center, and by the way, it's not small. But I have to tell you that if you had told me that this would be the time of the transports, I would say that's impossible.
Doesn't make sense.
It's just impossible because the economy is in the.
Unless the thinking is they'll be full of surcharges that will get removed way late.
That could be, but they don't make a lot of money on those. And you have Old Dominion. I don't know if ODFL. That company is just unbelievable. JB Hunt is doing incredibly well. Union Pacific is doing amazingly. David, that railroad merger could be incredible.
It could be. Haven't heard that much about it. It's moving. I mean, these things do take a long time, and this one is no exception.
But we're intermodal. Where you go truck to train truck.
Yeah,
it's just doing amazingly. I have to tell you, because I did some work ahead of speaking with FedEx Freight, and I just said it's happening. And I've had like Arc Best. I had Arc Best on. They were trying to do really well in a downturn. They're suddenly doing well. And Raj Subramanian, I mean, what he's done with FedEx is just nothing short of incredible. Kind of $5 billion of cost. He's doing an amazing job trying to buy the stock from Travel Trust. It never gives you a day off. So I'm glad you brought the group up, Carl, because it's all systems go. And I never, XPO, I would not have expected it right now. It's a highly unusual thing.
We mentioned this Nike downgrade out of Piper. They go to 50. They suggest maybe some of Hill's appointments are old blood. They want some new blood. They're worried about athleisure being too heavy.
Okay, so we own it for the trust, and I've been dealing with talking to Jeff Marks regularly about, do we just admit that we made a mistake and cut and run, or do we give Elliott, who's a terrific executive, great guy, more time? I read through this piece, and the piece is very damning. And I think that the new hires, being the old hires, well, they've got some good people there, but what this says they lack innovation. They lack something, it's something that's got pizzazz, so to speak. But is Nike done? This piece is Nike done? And David, as I say, where I wear my New Balance right now because I have bursitis of the ankle. That's something you can wait you when you get older.
Oh, thank you.
I go to my doctor. Says, listen, the only two I suppose should get new pair of Nikes. He goes, the only two you can buy are you can buy Hoka or you can buy New Balance. But I prefer New Balance. I said, where's Nike in the conversation?
Made in the USA too.
No, I mean it's just one of these things. It is amazing that in a very short period of time, that company is not revered anymore. And I think Elliott, I'm going to stick. By the way, I'm sticking with it.
You're sticking with it, yeah.
Well, because I told Elliott that let's wait until 2 years.
You have not been right so far.
You mean, are you saying that I've been wrong?
It's a Friday. I can barely speak. I figured I'd be kind.
David, I like Celestica.
I like Celestica.
It's up 10.
By the way, speaking of momentum, though, on the week, let's take a look at both Meta and Intel. Let's start with Meta. Coming off the introduction of, or potential soon introduction of, a new large language model, Spark. I mean, look at that stock has had a very nice move.
But it's really big.
Look at that week, up 10%.
Going back toward even. There it is.
Getting back toward even is Meta, which trades again, and a point we've made at an incredibly low, historically even,
low versus
multiple to EBITDA. With continued concerns about how much it's spending on AI, and there's that, and its free cash flow basically disappearing as a result. And then there's Intel, favorite of yours. So I will. All right, I will debit you Nike, but I will credit you Intel.
Well, thank you.
Which I pointed out many times you were positive on from the minute new management came in, and my God, look at the momentum there.
I met with Lip-Bu Tan, and anyone who wants to, if you go back to 2022 and you go to the Robert Noyce Award for the best semiconductor, there it is. It's just right there. Murphy from Marvell Tech lays it out. They're good friends. Jensen gives the endorsement, and you'll know why this man, who many people feel is the godfather of semis. Remember, everybody was in enterprise software. I mean, you would people and say, like, hey, what do you enterprise software? And where did you stand for comp? Well, that's over. That's over.
We should. Yeah, I was going to say, give us a 10-year on Intel, because that really doesn't do it. Intel hasn't seen the 60s since 21.
No, a lot of
its
people
market value is now $312 billion.
They end up.
We can remember. It wasn't that long ago. This was a $90 billion. Peewee.
And a lot of people were worried. Now remember, a
lot of people were worried that they weren't going to make it, including you, by the way.
I was worried, and it's a national treasure. But there was Lip-Bu Tan. He resigned from the board because he couldn't take what was going on. They came back to him. It was amazing that he agreed to do it. The first thing he did was go to every single person. Overall, said, I want to know what you don't like about Intel. He got huge number of, read every single one, incorporated it, and I got to tell you, moved the company a little bit more towards Cadence, which is a company, by the way, he saved. He's been a lot of people feel he saved dozens of companies, but he never gave up on American semis.
It happened very quickly. I mean,
because some people know how to lead.
The change in trajectory.
He knows how to lead.
Dramatic.
And the previous guy was.
We got our friend Ben Reitzes, of course, ups his target for the third time. In this year. There he is, just accelerating. They're a strategic foundry asset, the validation from Elon Musk, and on in terms of that terafab endeavor, and then, will it be able to get business? And the CPUs. I don't know what's going to stand in its way, but man, that is some momentum that stock has established at this point with the news flow.
ARM Holdings got the good CPUs, and by the way, AMD, Lisa Su, don't count them out. They're in there all the time because everybody's short everything.
Yeah.
They got some good memory. Another 11 because they have memory. And then when you look at this, and people keep rediscovering them, Carl. For instance, we have a nice position in Corning. And Lumentum's up. That people should realize that's the glass part. They're the fiber company, and every one of these it's like they're discovered every day. It's like people come into work. They say, "Hey, you know what? Have you looked at Corning?" let's go buy some. It's just by rote, and that's something I do not like because they're discovering it upon discovery. You vibe code it. I mean, even I know how to come up with some of it. No, well, no, I shouldn't say that. And yesterday I made a bad point. I was ill-advised to say that when I was in perplexity, you can do your taxes. It's true, but most people still do humans, and I think
I
Intuit
made
has
the
a good
point you
product.
can't do your taxes.
Well, I know you did. I'm agreeing with you. I just kind of felt
probabilistic.
Well, you gave me that bone on the intel. I just felt good for you.
Yeah. I give and I take, Jim. I give and I take.
No, you're fair.
Yeah, I try to be.
Yeah, I didn't want your mother to, give you a really hard time about being tough on me again, and she often does.
She's your biggest fan.
Yeah. Good point about Adobe, by the way. New multi-year low this morning.
My God,
Watch
man.
bonds. We walked you through CPI today. Not quite as bad as we had feared on core, up 2.6 year on year. And we'll get you, Mish, in a few moments along with some factory orders, so don't go away.
Let's wait till 10 o'clock, see what we got then, team. See what we got then at 10 o'clock. Let's wait till then. Being patient.
Dow Jones heat map being led by some tech, Nvidia and Amazon at the top of the list. We once again get CRM, IBM at the bottom, and we mentioned that Nike downgrade over at Piper. Overall, S&P trying to hang on to an 8th straight gain. We'll get Stop Trading with Jim in a minute. Time for Jim and stop trading.
Yeah, people are looking for new ways to play the data center. I'm going to give you I'll give you an easy one. Sempra. It's a great company. Jeff Martin runs it. It's got liquefied natural gas. It's got a great electric system, and it's got a great guy as CEO. And I just think 2.6% yield, 19 times earnings. These are now growth stocks. Do that. Don't keep paying up and up and up for SanDisk and then hope one day it goes to 1,000 and you ring the register and go and do Polymarket Kalshi for that stuff.
But you're still not going to budge on nuclear. Still a long-term skeptic on nuclear.
I was going to do Southern. I was going to do SO, which is they completed their nuclear plants, and but I just think that they took years and the overruns were hideous, and I still believe that the technology is just not there. And when Scott Strazik says, perhaps to Sarah at her unbelievable company.
We will get banks next week?
Yes.
How are you thinking about that before those prints?
Jeez.
Goldman's gone from 780 to 900 in just a couple of weeks.
It's high. It's high. I don't know, Carl. I'm going to throw that one back at you. I don't know. I just, I'm still thinking about the war. Okay, well, let me tell you, my trust owns it, so I think it's going to be terrific. And I think that Goldman's a play on volatility. I think David Solomon's going to be very, I think he's going to be low-key about the volatility because it sounds like he's just, kind of capitalizing on a lot of crazy stuff. But I do think M&A is going to be good, and I think his forecast is going to be very good. But I am long it, and I do think it can go to. I'll put myself out. I think it can go to 1,000.
Nice.
Go to 1,000.
Busy week next week.
Yeah, I did work at Goldman, but I do think it can go to 1,000. I think that barring something in the Middle East, okay. And tonight I've got a fellow, David Brazil from RBN, who's been my go-to source, and we're going to ask him about this stuff because I think that that's what could derail us. When Goldman gets derailed by something that we didn't expect this weekend. Otherwise, I think we'll be fine.
Watching the tape this weekend for sure.
But I am nervous because I feel like to make a forecast ahead of this darn. Oh my.
Yeah. Jim, good weekend. We'll see you tonight.
Yeah.
Mad Money, 6 p.m.
David,
Eastern
feel
time.
better. Thank you.
Don't go anywhere.
Big Ben in the building. Shout out to you, Big Ben.
computers now have primary control of critical vehicle functions.
that they don't need it, and we'll see, then this trade won't work out for us. But one of the things that I liked was that the CEO put a $10 million investment, a share purchase by a CEO of $10 million of their own money is compelling and something we pay attention to also. This is a story that's changing every day, but I think the market's got it wrong.
Britt, I'm going to get to you on Palantir in a second, but I want to talk about CrowdStrike very quickly. Bill, you own this one. I'm looking at this chart. This stock is under a lot of pressure, often seen as one of the leaders when it comes to cybersecurity with Palo Alto. Are you someone that also believes that AI is going to disintermediate the cybersecurity space?
I think it's gotten it wrong. I think we're going to have to see more demand on some of the traditional cybersecurity names. It's become a, sell first, ask questions later, and that's how the market's been reacting. And it's also, again, from a flow standpoint, there's a lot of private credit fears tied to software, and the best way to hedge those for those that hold it is to take down your public holdings. So I think the disruption is still continuing to play out. Those long-term multiples are continuing to come down. And CrowdStrike is at a pretty decent level of support. If you kind of look back a bit, it's I'd like to see it kind of hold where it's held a low. Inverse head and shoulders, kind of throw a little technical pattern out there if we can hold today's low. But we've seen some of the software names come off the lows today. AppLovin is one that's come off the low today. Palantir's come off the low today. You can see a lot of them are, maybe this was that last panic sell this morning. So let's wait and see.
All right, Britt, I want to come over to you. Palantir has been kind of in the spotlight. A lot of people think that Anthropic is going to quote unquote eat its lunch. Dan Ives got with a note saying he doesn't believe that's the case. What's your view on Palantir? And you're also a holder of the BUG ETF.
Yeah, I agree with Dan. So, Palantir will say is AI agnostic, right? So they use Claude, they use all of the data, and they were the original AI company. And so they have enterprise clients, government clients. The issue with Palantir, to me, is the valuation. I first bought it back 2 years at 24, sold some at 45, 75, and 100. And so it's still trading at somewhat of a nosebleed level. And I think that's more of the challenge, is that if all of a sudden you have this question mark about Anthropic, which I agree with Dan, you still have trouble around the valuation of Palantir. And so I think that for investors, you gotta watch the technicals, and the chart looks terrible here. So the stock could easily go to 100 just looking technically, and the valuations are really high. And I think on the software I own Bug, I haven't added to it. I've wanted to add, but it's really hard to prove this negative. And so I think until you get some type of baseline where these stocks just stop going down, it really is catching a falling knife.
All right, right now the BUG ETF down more than 4%. All right, still ahead here on Halftime. More trades from both Kevin and Jim, but first, the committee's playbook on the big banks ahead of earnings. Halftime's back in just 2 minutes. welcome back to halftime. Bank earnings, they kick off next week. The bank trade's been ramping up into the print with the KBE coming off its 8th positive day for the first time since 2018. Goldman is the first on deck. It's set to report on Monday. Kevin, you own that name.
I think they're going to crush it. I think all the bank stocks are going to have fantastic numbers next week. I think their guidance is also going to be strong. If you think about mergers, acquisitions, IPOs, something that we'll probably be spending a few minutes talking about in the latter part of the year, these companies are going to crush it, and I think that they're going to move higher, and you can buy them into the print.
All right, coming up on Tuesday, we got J.P. Morgan. Jim and Bill, you both on this one. Jim, you up first.
J.P. Morgan, what are we expecting here? A little update from Jamie Dimon on any credit concerns. We're not really expecting anything to move the needle in terms of the performance. And as Kevin just alluded to, look, we can't avoid it. If we're talking about the financials, if we're talking about the J.P. Morgans, and yes, the Citigroups, Frank, we have to talk about the mega IPOs that are coming up, because that's what we're really looking forward to in this space. The whole space had a fabulous 2025. We know that. We've had a rough start to this year. A lot of that has to do with private credit. But now we need to look forward on what's going to be positive for this sector. It is those IPOs. It is the reduction in capital that should be coming from new regulatory rules. And it is the strength in the U.S. economy that we all spoke about earlier, stable labor markets. There is still a lot to like in the financial space. I'm not really teasing you. Like, the best name in the space, just factually, if you look at the big banks, it's Citigroup. I'm not teasing you. That's the name.
Listen, man, don't break your arm patting yourself on the back.
I'm not. I'm patting Citi on the back.
You got to be careful, man. Bill, very quickly, your take on J.P. Morgan.
It's the best in breed. Citi's performed better, but J.P. Morgan's still outperforming the S&P financials by about 4% this year. Let's get technical for a second. 280, huge level, held it. Previous high going back to late 24, early 25. So I think it could be off the races with some good reports. But remember the financials. They go up on that good report. They always kind of come back in a little bit. So don't feel you need to chase post-report positive gains.
All right. Kevin, I want to go ahead to tax day. Bank of America reports big consumer franchise there. Any concerns about the consumer part of the business? Everybody seems to be very confident about the trading, especially with all the volatility.
That's a more traditional bank. They're not as deeply involved in the investment banking side. Of course, they own Merrill Lynch, and I think that's going to do really, really well, the wealth management side. Lower rates, obviously, are going to help from a mortgage standpoint for companies like Bank of America and Wells Fargo and Citi, to a lesser extent. But I think the numbers are going to be pretty decent. I'm more bullish on J.P. Morgan and Goldman Sachs than I am about Bank of America heading into next week.
All right, Bank of America shares pulling back about 1/3 of 1%. We now want to turn our attention to our Contessa Brewer with the CNBC News Update. Good afternoon, Contessa.
Hi there, Frank. Yeah, Vice President J.D. Vance right now is on his way to Pakistan to lead negotiations on how to end the war in Iran. Vance says he's looking forward to the high-stakes talks, and his team is ready to work with Iran if they act in good faith. But he warned the U.S. won't be receptive to Iran if it tries to play us. His words. The highest level meeting between a U.S. official and Iranian official since the start of the war. Non-essential state and city offices are closed in Oahu today. The island is bracing for more strong rain and gusty wind. Hawaii Governor Josh Green announced those closures and warned that potential flooding and power disruptions could affect travel. I'm just back from Hawaii. There were already disruptions to excursions and tours there. Storm had closed down roads because this is now the third storm in less than a month that brought all this intense rain to Hawaii. Spots got more than 100 inches. And the WNBA is officially expanding to 3 new cities. The Women's Professional Basketball League and the NBA Board of Governors approved the expansion Thursday. Cleveland's team will begin to play in 2028, with Detroit following in 2029 and Philadelphia in 2030. All this brings the league to a record 18 teams. So if you're loving women's basketball, and who's not, you get more of it. Frank?
Yeah, Philadelphia was long overdue for a franchise, Contessa.
Completely.
I know they haven't come up with the name yet. Liberty Bells. I'm floating out David Edelman, rest of the team.
You've got the New York Liberty already. What are you going to do? It's a little close, don't you think?
Yeah, but you have the Houston Texans, you have the Dallas. You can have some overlap when it comes to sports team names. Contessa.
Okay.
We don't have to be so rigid. It's fun.
Okay.
Our Contessa Brewer, thank you so much. All right, coming up next, the trade on Tesla with shares pacing for their 8th straight losing week. We're going to debate that and much more in our top calls of the day. And welcome back to Half. Let's get to some calls of the day. Morgan Stanley sticking with its 415 price target on Tesla. That represents about 20% upside, and that's despite shares pacing for their 8th negative week in a row. Bryn Talkington, I want to come over to you on this one. The analysts, they kind of cite that Tesla's hit 10 billion full self-driving miles. Does that give you more conviction in this name despite some of the pressure that's been on it?
I mean, we know this already. It's interesting. There was an analyst a couple weeks ago, I think at JP Morgan, that's like 125. This analyst is at 4 something. You can drive a Tesla semi through the price targets. I think what you need to understand is earnings come out the 22nd. We're actually looking for 40% earnings growth, so going in the right direction. They are the closest next to Waymo, those two companies, at literally achieving unsupervised full self-driving. And I think, Frank, the market really got it wrong during NVIDIA's GTC. Jensen announced this Hyperion chip stack to these OEMs, and a lot of people were saying, oh yeah, all these other car companies are going to be able to self-drive. No, not even remotely. It just gives them the ability to start training. And so I think when you understand what's actually happening, we have Tesla earnings are growing, which is great. We also have the Optimus, which we want to hear about that because they discontinued the S and the X at Fremont and are going to start doing manufacturing of Optimus. And so I think that's a good price target of 4 plus. But once again, the stock has been pretty much in free fall, so we need that to turn around before we're going to get a 4 handle on the stock.
All right, moving on. Speaking of autonomous driving, Uber's price target raised to 105 at Wolf. Bill, you own this one.
Yeah, we did trim it significantly about a month ago. We've loved the fundamentals. We love the cash flow story, the profitability that this thing has turned into. Problem is just the market, it just has not reacted well. I would love to see, some show of life here. It's trading right above $70. I think you got to get mid 80s at minimum before it even gets excites you again. But I think it's really from a flow standpoint that you saw a big failure at $100, and then it went from a pure tech stock to an industrial. And if you consider it as an industrial stock, it's really underperformed the sector by, 28% this year. So it's a tough one at this level. I think it's in no man's land. We've trimmed it, but I'd like to see another positive earnings report, another thought that the CFO thinks the stock's undervalued. They're going to buy, buybacks. Could help it, but nothing has.
All right, Uber pulling back more than 1% today. One more, Morgan Stanley hiking its target on the CME Group. Kev, you own this one.
Yeah, I like the call. More volatility increases trading volume. They've got lots of new product innovation. They're looking at the prediction markets. One really interesting thing about the dividend, in addition to what they pay, which is about $5.20 in the regular quarterly, they paid a $6.15 special dividend. They typically do this once a year. This was paid in March, so it could coincide with their regular dividend cycle. But if you put that together, I mean, you're getting over $11 a share just to own this name.
All right, coming up here on Halftime. Morgan Stanley is betting big on a space that's been booming with M&A. What is it, and how the committee is playing it? We're going to explain it all. Coming up next. Stay with us.
Discovery's 4 computers now have primary control of critical vehicle functions.
And welcome back to halftime. Let's get a check on the healthcare trade. Morgan Stanley hiking price targets across its biopharma coverage as M&A activity accelerates. Names include Vertex Pharma, Eli Lilly, and Amgen. I'm just going to give you kind of a little sample here. Vertex goes from $5.96 up to $6.12. Eli Lilly from $13.13 up to $13.27. Amgen from $3.09 up to $3.26. Jim, might as well kick it off with you with Vertex.
Yeah, well, Vertex is just a company that produces great drugs. Their science is terrific. Their cystic fibrosis franchise is what's the foundation for the company. On top of that, though, they have pain medications that are already approved. They're working on kidney treatments. They've just got a lot in the pipeline, and so I see the earnings going nicely higher over the many years to come.
All right. I want to go over to Eli Lilly. Kevin, you own this one. A lot of M&A by Eli Lilly, by the way. $7.8 billion deal for Centessa, $2.75 billion deal for another company to bring AI-developed drugs to the global market. Your view on Lilly?
Yeah, you know what I like most about that is that they're filling the pipeline behind just weight loss. And when you can do that and be successful at it, you're going to continue to see this stock move higher. I like the call. It won't be surprising at all if we're talking 6 months and they're raising it even higher.
All right. Important note, other two are overweight. Amgen at equal weight. Bill, you on this one?
Yeah, I think Amgen is, it's been a great performer to start the year. I like the way, it's kind of stood out where it was held back over the last 2 years. The GLP competitor really weighed it down. I think now that it's moved away from that narrative a bit more, you're going to see some of the other drugs it has that are coming up are going to continue to be a tailwind to its performance.
All right. We also want to talk about medical devices and just the tech behind the healthcare. Intuitive Surgical, great name that a lot of people own. Maintained as a buy by BTIG, 616 price target. They like the long-term potential of robotic surgery. What's your view on the idea of healthcare tech, medical tech, whichever you want to call it? Jim, I'm going to start with you in this name.
Well, I don't own this name. I actually don't own anything in the devices business. I'm more partial to the pharmaceuticals. Devices to me, the earnings flow is very volatile. It depends a lot on insurance reimbursement rates. It depends a lot on the flow of patients deciding that now is the time for a knee replacement or hip surgery. And I just feel like there's more stability in pharmaceuticals. I don't hate devices. And to the extent that somebody here is in Intuitive Surgical or Stryker or something like that, I'm just choosing my poison elsewhere.
Yeah, we look at it as not quite a call option on the future development, but Intuitive Surgical is down nearly 20% year to date. It's in the bottom of our portfolio, and it's one of those seeds that we're planting, looking further out that they have an edge. It's a long-term compounder, and it's been struggling over the last 2 years. I think that once the robotics takes that next step, I think it can be back on track to that long-term compounding. Okay. And some of those stocks that has it, goes to sleep for a little bit and then wakes back up.
All right, Kevin, you own this one, but we got to move on. All right, coming up next, we got one more committee move. Jim's ready with his latest trade. Plus, we will discuss the earnings setup beyond the big banks. Halftime back in just 2 minutes. And welcome back to Halftime. Jim, you made a buy in the financial space. It actually wasn't Citi. Tell us all about it.
That's funny. Well, I already owned BlackRock, but I only owned a little bit of it. So I'm adding to it now, bringing it up to a full position in the account. We talked earlier about the financials having a rough start to this year. That includes BlackRock down roughly 7% since the start of the year. A lot of that has to do with private credit. But let's face it, private credit is very small compared to the overall business with BlackRock. Think about the iShares. Think about mutual funds and all the other ETFs that they run. And think about what I said earlier, that I do think we will set new highs in the markets before year end. This is a great way to play it. Their assets under management go up with the markets. And, oh, by the way, with fixed income yields a lot higher than they were 4 or 5 years ago, a lot of advisors, a lot of clients go into BlackRock fixed income vehicles because it's a lot easier than just buying the bonds themselves. So a lot of reasons to like BlackRock here. And I think this is one that's been a sleeper, but we're going to end up talking a lot more about it as the year goes on. Sorry, one quick thing. This is not a call on earnings coming up on Tuesday. I have no idea how the earnings are going to come out. This is a multi-year play with BlackRock.
That's a key distinction right there. We got to move on for a second, but I'm going to get right to you. We also have the setup on key earnings next week, even though Jim tried to front run me. The big one, Netflix reports Thursday after the bell. JP Morgan just called it one of their top 5 picks. Bill and Kevin, you own it. Kevin, you're up first.
Yeah, I love the name. I love it going into the print. They just raised prices. If you think of things you can't live without, Netflix is in the top 5 for sure. You're talking about a stock that's still trading far below where it was when they started to get involved with the potential acquisition.
The earnings were sort of getting watered down. EPS growth was slowing. How much of an excitement is being priced in? They need to deliver, and if they do, the stock is going to really, go into the 1-teens.
All right, we also got Fastenal reporting on Monday. Bill, you own this one as well.
Fastenal, I think from an industrial standpoint, it has the flows, but industrials in general, you look at really where it kind of worries me. We've loved this name for a while. It's getting a little overpriced. It's in the bottom. I'd like to find a reason to continue to add to it. Earnings growth and estimates are going to expand, and kind of see how this earnings go. I think it's an inflection point for it.
All right, round out the week. We got Pepsi reporting on Thursday morning. Kevin, you own this one.
Yeah, I would say tepid at best from an expectation standpoint. The consumer stretched with higher oil prices, higher gas prices. This is something that maybe is going to be put a little bit on the back burner from a budgetary standpoint. If margins can hold up, it might be okay, but I probably wouldn't be looking at this or expecting too much out of the earnings report.
All right, year to date, though, Pepsi shares up over 9%. Coming up next, we got more committee moves. Kevin Simpson's got a trade in the metal space. His gold paces for its 3rd straight weekly gain. More halftime coming up right after this. All right, welcome back. Kevin, you're making a move in the metals space. Tell us all about it.
Yeah, this is by no means calling a top in metals, but this is trying to harvest volatility. And we saw intense volatility earlier in the week. So on Wednesday, Bryn, you'll love this one. We wrote a covered call on Agnico Eagle. This was 13% out of the money at the time. So we wrote a $245 strike, brought in $3.50 a share. This thing pulled back to 217. We're not going to get it called away in all probability. It's a 1-month option. But if you annualize out that $3.50, which doesn't sound like much, but it's a 20% annualized option premium. So we love the name. Stock's up almost 100% over the past year. This is just a nice way to get paid a little extra on a covered call.
Yeah, I want to talk about a couple other metals. Silver's down double digits since the Iran war began. Copper's down more than 5%. Bryn, you and BHP, biggest copper producer.
Yeah, well, they do a diversified commodities. It's still up 30% for the year. It's done much better than gold. And I really think on the gold and silver got overwhelmed by the retail and then algorithmic trade. And so I think those charts and the volumes just went parabolic for just speculative purposes. And so now it's come back to ground level. I don't think the retail investors were trading in BHP, hence the better performance.
All right. Looking at BHP right now, down about a third of 1%. All right, stay with us. Final trades, they are coming up on halftime. And we are back with final trades. Bryn, you're up first.
Capital One, it's been a bad stock year to date. Great company. I think earnings will be a catalyst for the stock to go higher.
Kevin?
Amazon, it's starting to move. I know they're spending a lot on CapEx, but AWS is accelerating and retail margins are actually improving.
Bill?
SLV would be a byproduct of right now China's export ban on copper. and it's a sulfuric acid impact on copper, and that is silver mining is a byproduct of copper mining, and that's going to hurt.
So PIX SLV, just to clarify.
Yeah,
Jim, you got the last one.
NVIDIA, the post-earnings sell-off is done, and it is marching towards $200 a share.
Oh, we did have a few seconds. All right, that does it for halftime. The exchange starts right now.
Thank you so much, Frank. A new threat emerges, and this time it's not Iran. Welcome to The Exchange. I'm Kelly Evans. The major averages are somewhat mixed at this hour, but on track for back-to-back winning weeks. The S&P actually having its best week in nearly a year, and the Nasdaq is up 5% since Monday and leading today. It's in the green, while the Dow and S&P are slightly in the red. And one of the biggest outperformers today is CoreWeave, up 12% on its new deal with Anthropic. On the flip side, ServiceNow dropping 9%. The UBS downgrading the stock, saying the AI threat is bigger than originally thought. In fact, the IGV software ETF is down 7% since Monday. Anthropic's AI models are once again behind the sell-off and even prompting an emergency meeting between Treasury Secretary Bessent, Fed Chair Powell, and major bank CEOs on how much of a threat it could pose to their cybersecurity practices. We'll get to all of that this hour. But we begin with the fallout from the Iran war on the economy. The oil shock sending inflation to its highest reading in 2 years, while consumer sentiment hits a record low. My next guest says every measure of today's CPI report is moving in the wrong direction for the Fed. Diane Swank is chief economist at KPMG. Also joining us is CNBC senior economics reporter Steve Leisman. Welcome to both of you. Diane, I'll start with you. As you look through the report, I guess the best you could say, the glass half full view might be, well, shouldn't this pass?
Well, the good news is that much of this was concentrated in oil. We did see a dispersion of price increases that have been growing. It did fall down a little bit in March. That was good to not have as many things going up in price, but we know what's in the pipeline. We already know that the Manheim Index showed that wholesale prices of used cars went up quite dramatically in the month of March, and consumers are using their tax refunds to buy both new and used vehicles. Those sales both increased in March, and that's going to put upward pressure on used vehicle prices in the month of in the month of April. So we're going to see many of these increases and the spillover effects as we move going forward. And for the Federal Reserve, the tough job is that inflation has not completely cooled at any time over the last 5 years to its 2% target. And in fact, it's reaccelerating right now. And I think that's a real challenge for the Fed at the same time that consumers seem to be spending, even though understandably they're upset about the level of prices being out of reach for too many.
Right. Steve, jump in here. How did you read the report?
Well, I'm thinking of, and work with me on this, folks, I'm thinking of inflation right now as a badly cooked layer cake. And I got at the base, I start off with inflation a little bit thicker than I wanted it. I have a layer of tariffs on top of that. Now, that may be running out. We did have a 1% increase in apparel prices. That could be a tariff indication, but mostly the addition to tariffs is probably running out. Now I'm going to layer on top of that a big chunk of higher gas prices. And on top of that, I have another piece of services or services ex housing and energy that is added on top of that. And that's how you get to this 3.3%. But so if I take away the oil, I'm still got a pretty thick couple layers underneath that I have to worry about. So all of this leads to me to a Fed that looks at this cake and says, you know, I think it's not time to necessarily, take it away right now. Just really take away or add to the additional stimulus out there in the economy. So I see a Fed on hold waiting to see if those layers dissipate or if I have to actually do something. And I think Diane is right. This is a multi-month thing that has to work. You can imagine, Kelly, that some of the increase from higher energy prices taking 3 months or so to work into the core if they're going to get there.
Diane, we see the odds here for a hike are still pretty small, but as you say, we're starting to teeter into that direction. Why would a rate hike, would it be the right response here to these price shocks, which are largely supply driven?
Well, what we don't know yet is what the demand destruction is going to be down the road from these, and that is something the Fed has to weigh. But my own view is that since what we've been seeing is the debate within the Fed about whether or not its next move will be up or down has intensified. It intensified before the war and at the March meeting. We know from the minutes that that was still top of mind, and we've heard more from some of the hawks like Austin Goolsbee on the Fed that have sort of noted the resilience of the U.S. economy in the face of higher inflation, and that does sort of lean you towards an additional hike. And I think that is where the Fed is going to go in April, is to signal optionality that the next move could be up or down, because that is what they're debating at this point in time. And they need to sort of be not behind inflation again and not stuck with the transitory story. The transitory story we heard already in the beginning of the post-pandemic inflation, and there are many elements of what we're going through in terms of supply chain shocks that echo the pandemic. They're not as bad as the pandemic, but due to rationing in many emerging markets, we don't know how long factories are going to stay online. And we also know that chips are at risk because of the slowdown in helium exports out of the Strait of Hormuz. Helium's a key component of chips. That we know what happens when you get chip shortages. They're prioritizing AI chips right now, which are higher margin to be produced, but that leaves shortages elsewhere in the system. The other interesting issue, and I just want to add this on there, is that the tariff-induced inflation, I'd like to believe it's over, but the export goods prices, which is something that's been influenced by high tariff inputs, those prices increase, and they increase with about a 6-month lag with the PCE index. In February, they accelerated at their fastest rate since August 2022. That's important as well.
Just going back, Diane, to the pandemic, obviously you had the government doing massive fiscal stimulus. What was the number, 5 trillion? When you add up all the different acts, we had stimulus checks going out and so forth. I mean, that's how you get, plus what the Fed was doing, that's how you get inflation. So reading through it this time, if there's no stimulus, and you could argue maybe there is a little bit of fiscal stimulus to keep an eye out for, but meaning how, doesn't this act more like a contractionary tax hike on the consumer and on the economy that, if anything, the Fed should ease in response to, or no?
That's not clear at all yet. What we've seen is in the aggregate consumer spending numbers, and we know there's a disproportionate role that affluent consumers are playing in holding up those numbers, but we also have a big bump in tax refunds right now that are due to tax cuts from last year, and those are hitting consumer bank accounts right now. Those are holding up things like vehicle sales, strongest vehicle sales in the month of March on new vehicles in 6 months. We saw used vehicle sales go up. Used electric cars got a lot of demand in the month of March, and those are being bought with those tax refunds. So it tells us that there is still stimulus in consumers' wallets, and I think that's important because it's a double-edged sword, right? It's helping to blunt the blow of higher energy prices, but it's also helping to buoy consumer spending along with the cushion in stock holdings that we've seen. Wealth effects should hurt more on the downside than they help on the upside. But in general, we've seen just an enormous amassing of wealth at the same time that inflation has compounded. And the Fed's inflation fighting credibility, I think, is at stake 5 years in.
Steve, a final word here?
I think the politicians want to monetize the oil price increase, but the central bankers don't, right? It doesn't help you to provide extra stimulus out there with your inflation problem when you have an oil price shock. I think the best advice here for the Fed, or the best route for the Fed, is probably to hold still here. Don't add any fuel to the fire, so to speak. You're right that the inflation of the pandemic, or the post-pandemic inflation, was driven a lot by the fiscal side, but also on the monetary side. I think there are lessons from the 70s that we've learned that you do want to tighten, but maybe not tighten too much to create a worse impact out there. So given that the Fed is restrictive and in a place where it could rightly say that it's not adding fuel to the fire, I think the idea of holding still here and not monetizing essentially the oil price increase is probably the route that the Fed will pick. And I think what's interesting is that's how the market is priced, Kelly. And it's priced that way for Fed Chair Powell, and it's priced that way for Fed Chair nominee Kevin Warsh.
I said last one, Diane, but just a quick observation I just want to get your reaction to. I mean, this is an important reading on consumer sentiment. This is not a survey with a 5 or 10 year history. Doesn't it go back to like 1950, 1960? And 2022 was the first time we saw that it, responded to those price shocks, sank to what was then a record low. This number is a lot worse than that. And I know people take issue and say there's been survey and methodology changes, and these are all political, UMich and Conference Board, but even Piper Sandler's daily tracker that they developed to respond to that, it was at a year-to-date low last week before this. So
That's where the layer cake thing really works well, in the sense of, you gave people higher inflation to begin with, you piled on the tariffs, and then you piled on the oil price shock. And I think all of that is weighing down on the consumer. And maybe it's a pile of laundry rather than a layer cake, more appropriately said.
Yeah, and a stagnant labor market. The idea that you can't just jump jobs and hop jobs as you did during the hiring frenzy. Remember, everything's relative. And even though this is not the stagflation or the situation in the 1970s, right now, the lessons of that era are important. And it really does sort of nail down 100% of the whole economy feels inflation. Only a few percentage points feel unemployment. And that's what we're seeing in these consumer sentiment figures. And the sentiment data is much more sensitive to inflation, and the ongoing upward price is pressure on price levels. The level of price is being very high is very important right now for the U.S. consumer.
Very interested how it goes when we get through the consumer part of earnings season, in a few weeks from now and for the rest of the year. Thank you both. Really appreciate it. Diane Swonk, Steve Leisman talking us through those results today. Let's get to the latest now on the meeting with Treasury Secretary Bessent, Fed Chair Powell, and the bank CEOs. Hugh Sun joins us with more, Hugh, on this meeting that was earlier this week.
That is right, Kelly. So a new AI model is raising enough alarm in Washington that regulators rushed to convene Wall Street's top CEOs this week to talk through the potential cyber fallout. As you mentioned, Bessent and Powell called an emergency meeting with the CEOs of America's biggest banks to discuss the cybersecurity risks tied to Anthropic's latest model, sources tell CNBC. The CEOs, including Bank of America's Brian Moynihan, Goldman Sachs' David Solomon, were already in D.C. for a financial services forum board meeting on Tuesday when they were summoned to Treasury headquarters, I'm told. The message, as I understand it, banks should be preparing now for the cyber risks posed by Anthropic's new Mythos model. Now, as a reminder, Anthropic this week announced a limited preview of its latest AI model, Claude Mythos, citing concerns that its capabilities could be exploited by hackers. The model has already identified thousands of, quote, high-severity vulnerabilities across the corporate world, including in major operating systems and web browsers, according to the company. Initial partners in Anthropic's cybersecurity initiative, which it calls Project Glasswing, include firms like JPMorgan Chase, Apple, Google, and NVIDIA. And an Anthropic official told CNBC the company has been in ongoing discussions with the U.S. government about Mythos and its potential cyber implications. Kelly.
So again, the concern here is with this Mythos model. Mythos is able, and explain, Hugh, did Anthropic unleash Mythos on the world, or did it partner with companies to identify these vulnerabilities? What's the order of operations?
It is not unleashed the world, and thank goodness it's not, Kelly, because it's apparently very powerful. So they, at some point, Anthropic did realize the implications of this LLM model, and basically said, we're going to have a very veiled rollout to a few key players so that they could begin to gird themselves against this threat and essentially use AI to protect themselves from future attacks from people using AI as well. Kelly.
About the best press I think Anthropic could wish for this rollout. Hugh, thanks very much, Hugh Sun there. Our next guest says the meeting underscores how vulnerable private sector companies could be here. John Carlin is cybersecurity chair at Paul Weiss, Rifkin, Wharton, and Garrison. I think I got that all in. And a former assistant attorney general for national security. John, it's great to have you here. What's your understanding of the issue here? How real are the threats?
This is a real issue. I mean, if you think about it, cybersecurity has already been estimated as a multi-trillion-dollar problem. And that's because of crooks, nation states, terrorists attacking our systems day in and day out. And one of the main ways they do that is they go after vulnerabilities. Think of your house with an open door or an open window that remains unpatched, or because the technology is old, is unpatchable. To cite one report, alone from Cisco, of the top 10 exploits used by criminal groups and others in 2025, 2 of them were vulnerabilities that already were more than 10 years old. And 1/3 of the top 100 exploits used were also more than a decade old. And 40% of the vulnerabilities that get exploited are on IT that's so old that it cannot be patched. So you have to get new systems in place in order to be able to patch it. And the problem with Mythos, if it's released, is it means that you don't need to be a cybersecurity expert. You don't need to be a coder. You can be an average person behind your keyboard using this powerful tool, and it's finding flaws, according to Anthropic, across literally every single major operating system and every major web browser that have existed for decades, but no one has ever been able to find them before. So think about that. With that many new vulnerabilities, with the ease of a click on a keyboard that you can get into a system, and then once you're in using the same tool, you can do damage at a speed and scale that simply was not ever capable before. That's the genie that's coming out of the bottle.
Again, I haven't done a deep research on this, but just thinking this through, I mean, in some ways, I'm glad that this is happening. If these vulnerabilities are known and have existed, first of all, what are all the cybersecurity companies and corporate companies doing? Or where's Microsoft? Whoever is responsible for patching this, it feels to me a bit as if someone walked down a neighborhood, with a scanner and said, here are all the vulnerabilities in all these houses. Well, on some level, you'd want to know. So what should everyone do? Just go to Anthropic and say, give us this tool and let's go find this. It's interesting that all the cybersecurity stocks are selling off on this, when if anything, it suggests that companies need to be more proactive in deploying these technologies to patch things up.
You raise an important part, and that's what I think Glasswing is a good example of what should be done, and should be done before other models as well, which is they're allowing those that use them, cybersecurity companies, those that might be vulnerable, to get in and figure out how can we protect ourselves before this is released into the wild. It does raise the larger problem, though. This is one company handling it responsibly. What about other companies as they develop? And what about companies that are developed or have this breakthrough who are the bad guys? And I think what it points to is we really need a new framework to figure out how do we fix these vulnerabilities at scale and throughout society. It's one thing to focus on, Fortune 100, Fortune 500 companies that have the resources to pour into this and quickly, and that's got to be a priority. Our critical infrastructure depends on it. But what about mom and pop, the small businesses, medium-sized businesses? How do we get them to get the new systems that even can be patched in time before this tidal wave of new attacks enabled by AI occurs?
But again, what's the alternative? To leave everybody out there as sitting ducks? I think there's a responsibility. Look, we're in the middle of a war against Iran. We have Russia on the offensive. Iran has explicitly warned that it could attack U.S. Companies, their cybersecurity defenses and so forth. So I don't know exactly what role the government could play in this, but there's something to be said for deploying this technology and kind of reinforcing the defenses before someone with with much worse motives goes and does it. And, if Anthropic has the technology, how far behind could China, Iran, could Russia be?
I think that's exactly the right point to be making, and share the concern. It's been known for a while now, right? Like, look at the statistics I gave you, that a lot of the cybersecurity problem is coming from unpatched or unpatchable vulnerabilities. Having us, a company that is a U.S. company that shares our values, or an allied country, get there first and be able to sound essentially the alarm bell so this can be fixed, which was critically important. And I don't see a choice but to do it that way. But now there's this question of who's going to win the race before a model like this gets deployed. How fast can we move to ensure that it doesn't cause the damage that has been previewed with Mythos Preview?
Just a final thought on this. And Anthropic, I believe, has committed $100 million in usage credits to some of the bigger corporate partners it's selected, $4 million in donations to help harden software. We all have to keep in mind, too, this could on some level be a marketing exercise. And it's better to find out now, how successful is it? It may be the case that all of these concerns are somewhat overblown or not. But so I understand on that level, if the cybersecurity names are selling off today because Anthropic's going to come in and effectively say, we'll help you with cybersecurity, we'll disintermediate them.
Or that there may be some new solution that's ultimately, even if it's not Anthropic's AI dependent, and so they'll be looking to see who can develop that new type of solution first. And you're right as well in terms of people have previewed that this is a problem that could occur. You have people testing it now. A lot of what we're talking about is based on Anthropic's description of the problem from its own testing of the tool. And we'll need to wait and see if this is the tool that is that step change in technology. Whether it is or isn't, though, I think everyone is predicting that step change is coming. So there's an urgency now to focus both and government on how we can be prepared for it. The other issue is outside the security itself, preventing it from occurring is going to be, in the short term, I think, a focus on resilience.
Yeah.
So let's say the tool gets out there, you do get in, how can we make sure that we can continue to do our business without significant disruption?
Right, because this is a great moment for investors, those who really understand these businesses. We were just showing Bug and ETF, but Hack is one that's down 25% from its October highs. So if this is all an overreaction, or if these companies could actually help in some regards, it would be an interesting buying opportunity. But we'll leave that for the traders. John, thanks very much for now. Appreciate it.
Thank you.
John Carlin with Paul Weiss, Rifkin, Wharton, and Garrison. Coming up, the president says speaking of Iran, that they hold no cards while the vice president is on his way to Pakistan for ceasefire talks. We have the latest with oil around $98 a barrel, fractionally higher today, still down about 12% this week. And as we head to break, the chip stocks are on track for a big week with the SMH ETF up about 11%. And Intel is one of the big standouts there. It's up 40% so far this month. It's riding a 7-day win streak, its longest since 2023, and it closed at a 5-year high yesterday on its expanded partnership with Google. Nice rebound there. We're back after this.
This is The Exchange on CNBC.
Welcome back to The Exchange. Not a lot of relief for the crude oil price today. In fact, it's fractionally higher. WTI around 98 and change per barrel. As the vice president sets off for U.S.-Iran peace talks in Pakistan, Megan Casella is live in D.C. with the latest. Hi, Megan.
Hey, Kelly, so these negotiations appearing to be on thin ice today before they even really get underway. Both sides doling out some tough talk and remaining at odds over the terms of the 2-week ceasefire. So the Speaker of Iran's parliament earlier today warning that 2 issues that Iran believed to be part of the 2-week deal have yet to be implemented. That was a ceasefire in Lebanon and what he described as the release of Iran's blocked assets. He wrote that, quote, these 2 matters must be fulfilled before negotiations begin. So that suggests that the focus this weekend will need to be on litigating the terms of the ceasefire, even before Iran is willing to engage on broader peace talks to end the war. And then on the U.S. side, President Trump posting on Truth Social just in the last hour or so, saying the Iranians don't seem to realize they have no cards other than a short-term extortion of the world by using international waterways. The only reason they are alive today, he says, is to negotiate. So acknowledging there the leverage that the Iranians do have in the Strait of Hormuz, while still suggesting that the U.S. has the upper hand. All of that said, Kelly, remember that Vice President J.D. Vance is the one in charge of the talks for the U.S. side. He's well known as an anti-interventionist. He was reportedly the biggest voice of opposition against war with Iran inside the White House. So there is some speculation because of that having him lead the U.S. delegation could potentially increase chances of a deal. Kelly?
All right, we need those chances, I suppose, to take any increase they can get. Megan, thanks. Our next guest says we avoided the worst case scenario in the conflict this week, but the true off-ramp remains elusive. Let's bring in Ed Mills, Washington policy analyst at Raymond James. Ed, it's good to see you. We've been talking to a lot of geopolitical experts this week about what might happen with the Iran conflict. Based on what's happened so far, what can you tell us about the fallout kind of back at home?
Yeah, Kelly, clients here at Raymond James have been asking kind of what is the end game? And what we have told them is a good degree of skepticism has been something that's been really important. There was a sense that this could be over very quickly. We told them it will take a little bit longer. As we look at the ceasefire, there are 3 things that really are important. What happens with the enriched uranium? What's happening with the Straits of Hormuz? And what's happening in Lebanon? We have 2 additional things that the speaker from Iran has just added to that. But the U.S. delegation are going to make sure that we know what's happening with that enriched uranium, know what's happening with those straits, and can make sure that they're on the same page with Israel.
And what's the political fallout, both in terms of the midterms and, I mean, look, that consumer sentiment number today is really bad. It very much reminds me of the bad June 2022 readings we got for Biden, which I think was also right at the same moment coming up before the midterms.
Yeah, Kelly, you're absolutely right. One thing that we've always tracked is the right track, wrong track of the country. Because generally, if things are on the wrong track, and when you see the consumer sentiment the way it was today, kind of at record lows, that absolutely tracks with wrong track. The Republicans had a lot of headwinds coming into this year for control of the House of Representatives, and I think people are anticipating that is only growing, and it's really moving a conversation over to the Senate. The Senate has been a math problem for Democrats. They have to pick up 3 seats, and there's not a lot of great opportunities for them to do that. And so we look at this consumer sentiment and say, well, actually, if Democrats are able to pull that inside straight, are they putting more states into the competitive column? And could the Senate actually flip? That is what the market's going to start paying attention to here. And then when we look at some of the policies, is it going to be Democrats challenging him on entitlements that got cut under the One Big Beautiful Bill last year? Is it going to be Democrats challenging him on some of the tech export controls with China that he's trying to loosen up? And that's really important for semi-cap equipment. That's really important for semiconductors. So those conversations are really what we've been spending our time here at Raymond James.
That's a great point. Yeah, and bringing it back to one of the most important parts of the market as well. So the true off-ramp, though, you think does remain elusive. Talk a little bit more about how you're looking at things.
Yeah, so I think there's 3 paths from here. You could have this breakthrough. You could have an agreement. I think that is unlikely in this near-term time period. Things could fall apart. We see kind of something that is quite fragile. We see Iran continuing to attack Gulf neighbors. We see activities still going on in Lebanon. Or we can have what we usually get, progress and then kicking the can down the road. So I would expect as a base case over this weekend is getting progress, trying to get to that next deadline. There is a concern that if there is not progress, we've kept all those military assets in the region. And something that we have told folks here at Raymond James is that when President Trump has positioned assets from a military perspective in a region, he's used them. And so the chance that we have escalation before we get final resolution is very high, Kelly.
Right. And that being the case, is that you think why the oil markets might be responding the way that they are? Again, they're not so anticipatory. We'd have to look out to future contracts for a little bit more of that. But after that big drop in the oil price a couple of days ago when the president called off additional strikes, it's since been treading water, if not drifting higher.
Yeah, so on a call yesterday that we had with a couple hundred clients, we asked what the base case for oil, and over the next 3 to 6 months, about a majority said around $100. And so they're anticipating things don't get much worse. But even if things end tomorrow, getting all of those tankers through the Straits of Hormuz, getting oil production back online, our energy team has really done a nice job showing just how long that's going to take. And because this has gone on now for a month and a half, it's going to take much longer than that for things to return to normal. So the new normal in the energy prices is higher than it was before the conflict, at least through the end of this year.
That's for sure. Ed, thanks very much. Appreciate it.
Thank you.
Talk to you soon, Ed Mills. Coming up, OpenAI says cyber risk isn't the only reason that Anthropic is withholding that Mythos model. We'll have details from their side of the story next. And before we head to break, check out shares of Commvault Systems up as much as 12% on a report the data protection software provider is exploring a sale after recent takeover interest. Thoma Bravo is reportedly one of the firms interested in a deal. Those shares are now up a little bit less than 10%. CVLT. We're back after this. Welcome back. Anthropic, as you heard earlier, is withholding its latest AI model called Mythos. It warns it could usher in a new era of cyber risks. It says it's capable of exploiting vulnerabilities in every major operating system and web browser. But OpenAI sent a memo to shareholders alleging its competitor isn't being entirely truthful. Kate Rooney has more in today's Tech Check. Kate?
Kelly, so we got a hold of that memo that OpenAI sent to investors this week, and in it, the AI giant accuses rival Anthropic of a lack of compute. So that's basically the hardware, data centers, energy needed to train and run some of these AI models. OpenAI in this memo outlines plans for 30 gigawatts by 2030. Anthropic, they compare that. They say they're expected to have roughly 7 to 8 gigawatts by the end of next year. In the memo, they say even at the high end of our range, our ramp, being OpenAI, is materially ahead and widening. And they say the scale is now a real differentiator. This, Kelly, has been really a strategic disagreement between the two leading AI labs. You've got OpenAI planning to spend about $600 billion in compute over the next 5 years. And then Anthropic has taken a much more conservative tack on this topic. CEO Dario Amodei has criticized what he called the YOLO approach on the data center build-out. He frames their approach as much more responsible in terms of capital allocation. To investors, though, OpenAI highlighted some commentary from Ben Thompson over at Strategery. He argued that Anthropic's compute is now going to be a product constraint, could also put a ceiling, he says, on growth. They really talk about that in the memo this week. Of course, Anthropic did release that new model, as you mentioned, Kelly, only going to be available to 40 companies, rolling out slowly, they say, because the model is so powerful. But OpenAI really pouring cold water on that, saying reluctance to make this model widely available to the public is actually not about security concerns, and comes down to the reality that Anthropic simply does not have enough compute. They cite Thompson on that too, but Anthropic's CFO said recently that they did just make their most significant compute commitment yet. That was the Google Broadcom deal to keep pace with what he described as unprecedented growth, Kelly.
That's a fascinating point, on the compute angle. While others think or cite certain kind of forums suggesting that this tool just isn't that powerful or is somewhat overblown. And again, on some level, I'd like for us all to find out. I'm not saying to unleash it on the unprepared world. And I do worry a little bit, not just that we always say small businesses who can't. What about state and local governments? I mean, if you're looking for anywhere that has old systems and really important information, I think about that level as well.
It's such a great point. One of the things I thought, Kelly, that stood out in their announcement was some of the vulnerabilities that had been out there for 30 years, had just been sitting out there that Anthropic's new model was able to solve and find in seconds. So I think the power of this, regardless of Anthropic rolling it out widely or not, I don't think that's up for debate. A lot of people, look at that and say, wow, if that gets in the wrong hands. I think the question is, this model will at some point be released more widely. The heads up that some of these companies are getting, at least, you talk about this group that got access, it's JP Morgan, it's Google, AWS. It is not necessarily small local governments, but how much of a heads up do you need to actually protect and really fortify against bad actors?
Have they said, is it, my mind goes to Microsoft, which, their software is ubiquitous, their operating platform is ubiquitous. I don't know if they are the ones who have these 30-year-old vulnerabilities, or if we're talking about a variety of software and hardware players.
It's internet browsers, it's sort of everywhere. And one of the things that this model is apparently really good at, by the way, it was not designed for cybersecurity. That was what the CEO said. Essentially, we tried to make this really good at code, and as a side effect, it happens to be good at cybersecurity. One of the things this model is apparently really good at is taking sort of separate things, like making a connection that's needed to solve those vulnerabilities. It sounds really complex, but it's something that this model is really good at. And so it's hard for a human to parse through that amount of data and find these vulnerabilities. But there are things that were sort of in plain sight that this model was able to do. By the way, it's not just Anthropic. OpenAI, from what I'm told from sources, is working on another cybersecurity model. They don't plan to gatekeep it in any way. So even if it's not Anthropic, other competitors will be coming out with cybersecurity models. Clearly, as you talked about with Hugh, going to get the attention of U.S. out of it.
I was thinking a little bit about a wildlife analogy, in the sense that what it's good at is kind of circling the hyena pack to attack a deer or something like that. And so perhaps that will have other applications as well, if you'll forgive the analogy. Kate, thank you very much. Kate Rudy.
Thanks,
Appreciate it. Let's get to Julia Borson now for the CNBC News Update. Julia?
Kelly, the Irish government is calling in the army to help clear blockades on crucial roads as protests over rising fuel costs entered their fourth day. The protesters, many of them farmers, have caused major disruptions by blocking several highways, ports, and even an oil refinery with trucks and tractors. They say they will continue to protest until they can meet with officials and get more support. A warehouse employee has been federally charged with arson for deliberately setting fires that destroyed a massive Kimberly-Clark distribution center in Southern California. The fires engulfed a 1.2 million square foot warehouse and caused roughly $500 million in damage, according to federal prosecutors. The suspect allegedly started the blazes, offering up some of her most direct remarks yet about her political future. At a conference in New York today, she said she is thinking about running for president in 2028. If the former vice president decides to run again, it would be her